Tuesday, June 25th, market analysis, staying early. Good morning. We are 10:06 California time, and the stock market indexes in some cases are about to, I think, or have made new lows. This is since the Thursday last week, bearish engulfing ER official sell signal because of RSI conditions and price action. We have a red bar candlestick at the top. You'll notice most are yellow or white means nothing. Yellow means overbought or oversold. And red or green means an actual sell or buy signal respectively. So far so good. ER1 always gets in the day of the signal. And by the way, yesterday we had another ER sell signal. Remember, this is 100% automated. You just sit back and watch. If you want to change the speed at which the stop, automatic trailing stop moves, you can do so by changing what we call the kicker. Kicks along the protective trailing stop, which has a special formula attached to it as to how it moves, not your standard percentage, number of ticks, dollar amount, or anything like that. The 1 minute, 5 minute chart on the E-mini shows you where exactly the 5 minute mark. We got short a few days ago, Thursday last week. The green line represents the trade line. It connects the current quote with where you either got short or long. And if it's red, it's a loss. If it's green, it's profitable. So we have a nice green line, and we are very close to making another new low for the whole downtrend. Well, are we in a downtrend or not? How do you define the word trend? Is it the last 5 days, last 2 weeks, 1 month, 2 months, 6 months, a year? You totally have to be specific when you start talking about a market is trending, or the trend is up or down, and what time frame you're looking at on the chart. And most people on CNBC, been on 3 times myself, do not say anything like that at all. Big mistake in my opinion. They don't define what they're talking about when it needs it. Anyway, we are dropping very nicely, and I just want to straighten out that line. There we go. Put it back where it was. So now we are about to, it looks like, make new lows. Late yesterday, we had another new short sell signal, basically right smack dab on the close, which is 1 o'clock California time, the close of the stock market historically. And stocks open at 6:30, so typically years ago it was always 6:30 to 1 o'clock, but things change. The only constant is change itself. So I love it, looking at it great, have no change of opinion. Let's look back real quick on the E-mini daily data chart. We're very, very neutral on the RSI at 60. Anything between 40 and 60 I consider to be very neutral, around 50 obviously. And the RSI does turn red when the price turns red, or you could say it vice versa. It's an official sell signal. Plus, of course, we got the exact high day last week. Okay, enough of that. The spider. Also, Thursday last week, no short signal. We got a trade going on that's a very profitable trade, about to make new lows as you would expect. And we have another sell signal yesterday. Okay, 1 minute spider, and this is the 1 minute. Just about, or maybe it did make a new low this morning, I think by just a few ticks a few minutes ago. And the next chart is the QQQ. Now, we did not get another sell signal yesterday, but we do have one on top of the market, the high day. I've been talking about it closing this gap at a minimum, and I do think that's going to happen very soon, maybe even this week. 468, 30-ish is going to do the job just fine. But I don't think it's going to stop there. I think it's going to come down to at least 460.60. And to be very honest with you, I think it has a very good chance in the next few weeks to come all the way down to approximately 450, 447, 448. And there's a chance of even lower than that. It depends quite a bit on how it starts to move its way down, fast, slow, bouncing a lot, etc. So the QQQ 1 minute chart, which has already come down the fastest, the best of all of them, is still holding a short from the high day. And you can see our trailing stop has not gotten hit, so we are still short with a stop that protects a profitable trade. This is for a longer term type position, and whatever the market will yield, that's how long. That's your answer. So I'm looking for new lows. Maybe not in the Qs today, but maybe so. Certainly very soon. And we're looking at the NASDAQ futures sell signal smack on dab, smack at the top of the market on the high day last Thursday, regardless of whether there was a trading range on the previous day, which was Juneteenth, the holiday. It was still an outside down day relative to Tuesday, the day before Juneteenth. So regardless of whether it was trading on Wednesday or not, Thursday was still a bearish engulfing, holiday or not. Yay! So I'm looking for new lows very soon. At the moment, that's holding up better than some of the other indexes. But remember, it started to go down the quickest, the fastest, the best. So it could stand to hold a little while the other ones go down. NASDAQ 5-minute chart just finished, it looks like, a rally and has dropped off nicely. But we did get stopped out of this particular trade on the 5-minute chart. And it was the one short position exit. That's our little code. Nice, very nice. Got short at 2202.5, and on our scalp out at 20.070, 32.5 points. And on the other trade, still an ER1, but overnight version from the same short of 2202.50, we are out today, a little while ago on the rally, 19.864 and 00, it looks like, whatever. Great. A little lower than where we are at the moment. Okay, fine. What about the Dow Jones? It has a double top formation with both highs being bearish engulfing ER sell signals. Remember, I didn't do this. This is automatic. I just wrote the code or told somebody to write the code for me. The bottom of the market also has a bullish engulfing. Don't believe me, go look and check at your own charts. So we had two great short sales. We're out of both, and we're waiting for something new. I think this market is going to make new lows and drop off a lot more. The minimum downside objective in the double top should be 35.070-ish. Here is the 5-minute chart on the OIM, futures Dow Jones. And it's already made new lows than yesterday and the day before. Deserves a little bounce, got fairly oversold on a very short-term 5-minute RSI. So after a little bounce, new lows again. Now the Russell, not that important lately. Major historical support, resistance in this red zone has stopped it very often in the last 2 years and did it again. So I'm looking for a test of previous lows of 2013 and definitely cannot rule out 1934, 36, 38, whatever, 1937. And the 1-minute or 5-minute Russell chart, not quite a downside breakout again yet. Hey, what about bonds? They're trying to double top out. Currently a little bit lower. No bearish engulfing would be nice, but resistance seems to be stopping the rally. Excuse me. And I do think that we are going to slide off some. Now, I'm not that bearish, not that fast, not that big a deal on interest rate futures going down, but I do think it'll fiddle its way back down to 16, maybe 117. And that's 3 points or so from here. And I can't rule out another test of this support area at 15-ish, down to about 14. And the notes, pretty much the same story. Bearish engulfing, part of the top of the formation, and I point out the bearish engulfing on the bonds also. Actually, we had two of them. Both worked okay, but not really great. It's the ones that we could be having right now in the stock indexes. It could be fantastic. Next. And then we saw notes. Crude. I've got my New York quotes back. So these are up to date and doing fine. Bearish engulfing a couple days ago. Looks like it's part of the topping out process after we got through resistance slightly yesterday on the close, and now today a little tiny bit higher, but the current quote's back into the support area. We'll see how it handles a little bit of support below the market, and if it starts to close below 79, I fully expect it to go down to 76 again. With this bearish engulfing as part of the top, now I don't think it's the highest high. I should turn on my crosshair, which is supposed to be on. There we go. Did make a very minor new high. So if it does get below yesterday's low, which I don't think it's going to, we could have another bearish engulfing. What about natural gas? Double topped out, slipping, hasn't closed below the low between the two highs, which is the downside breakout at 2.644. If it does that, I think it's probably going to crash completely into new low ground all the way down. But I think I have to stay with neutral to bearish here. The little double top and the longer term trend for many months has been lower highs again and again and again, and lower lows. That basically defines a trend. What do we got for heating oil? Bearish engulfing 2 days ago, basically the top of the market. So far, so good. A little bit of a rally doesn't kill a signal. It's not higher than the high of the signal day. Looking for lower levels. Next, double top formation in gold. Now starting to break in new low ground for a few days, and we did have a bearish engulfing, but that's not an ER sell signal because we don't have also the proper RSI conditions develop. But it would have, could have, should have if our RSI had cooperated. Anyway, I like a bearish engulfing, causes the market to usually go down, and it's starting to do so now. Double top formation, I think we're going to have another breakout, this time legitimately by closing below the yellow line. And then the minimum downside objective is to 2148. Yeah, 2144. Next, silver. I thought the silver market was going to form a head and shoulder top. I think it has HAS past tense. My rally high, I put a circle smack dab at this price level on today's date, was going to be about 31.31, but I only got 2 days earlier a rally high at 30.90-ish. So I didn't make it as high as I'd like, and it seems to have topped out about 2 days earlier than I'd like, but that's not too far off. I would have loved it to be in the yellow circle, but it didn't make it quite. But that's the damn shoulder. That's a bearish engulfing. That's the top of the rally. We now have a current trading range below the neckline. The minimum downside objective I'm about to forecast for you is going to be down. Oh, I already did this before. Sorry. Down to 24.00 or more. That's a pretty good break for silver. From 29 plus to 24. Gold, let me go backwards here. Gold does not have the same, well, I went forward. I didn't want to go forward. I want to go backward to gold. Gold's got the double top, and it's got a lot of bearish downside potential. Now I can justify a breakout on silver to go down as well as gold. So both gold and silver are probably going to hit the dust here. What about platinum? I have to say the same damn thing for platinum. My circle represents the bullseye today's date, same as silver, and the price level was a little bit higher than what we got just yesterday when we got up to 1012, and I was looking for 1019. Close, but not great. Low and last at the moment, below yesterday's low, below the opening and close of the day before yesterday, but not quite lower than 2 days ago's wick, the lowest low. But I think we're going to do that very quickly here to this week. And the neckline is down here. Now, I haven't yet, and here we go, shown you the minimum downside objective on the gold. What is this, platinum chart? Yep. And there's the depth of the formation. Grab it and pull it down to, I think it might break out in a couple days. That's just an educated guess. 1, 2, 3, 4. The downside objective is approximately 774. That's 774.8. big move down. And for platinum, that is a new low for a long time. Yep. Next chart. High grade copper. I'd love to say I can make a case for a head and shoulder top here. I've got a first shoulder with a bearish engulfing signal. The top of the formation is at a whoppingly important, if that's relevant, a word, whoppingly. It's almost exactly at a major previous top in a market that happened back in March of 22, over 2 years ago, and a bearish engulfing ER sell signal on the exact high day. This time we didn't get a bearish engulfing ER sell signal, but we got a high almost exactly at the same price over 2 years earlier, and it turned around big time. Now testing support a second time and not doing a real good job of hanging in there. I mean, it's low and last for the moment and looks like it's going to make new lows any tick. Could very well. 4.3700 is the low, and we are currently trading at 37.05. So, well, the low is 36.75, sorry. Very close to the low. Okay, next. Soybeans. Okay, here comes the problem with the grain complex. I didn't want this. I was trying to justify a longer-term major bottom formation, but it looks like that may not happen. We are now challenging the two other previous lows, one of which we caught the exact low day. It was a great trade for April 19th was the bottom. We're right back down there again. We're not quite oversold, unfortunately, but I don't see any reversal. I don't see any strength, and we're closing below previous closes and close to the lowest lows for weeks. A downside objective has already been fulfilled a couple of days ago. No particular reason to go down any further. And that significant support area, I'll draw it in for you. Really not that important, or needed rather, right about like that. And yeah, right like that. Okay, is being tested. Unless it stops and starts to go up with pizzazz, we could be very bearish on soybeans. Wait and watch and find out. Soybean oil is doing something very similar. It's testing the lows that we made a month and a half ago. It could have been, should have been, might have been, and now I'm starting to change my story. This little shoulder low on a giant head and shoulder bottom formation, which took 2 years to potentially, I kept telling you there's something major wrong with this formation. Two things. First of all, it's way too big. Normally they're a few months, maybe 6, a year when they're big. This is 2 years. Now, not that it couldn't happen, it's just very rare, therefore unlikely. And it's at the end of a sideways trading range as opposed to the bottom of a longer-term bear market. So that's another wrong place for it to form, as well as its size. So now we've got soybean oil starting to break down, and we didn't want to do that. I just want to expand a little bit more. And the lowest low is almost touched exactly, and that was on May 9th. But it's still down here. It's below and trading below and sinking momentarily below everything except for the lowest low day. It's got to turn around. We are super close to being oversold. So there's a minor so far saving factor, but it's got to start to do it. I mean, I might be a day early or half a day early, but I'm not going to say it's bottoming out until I see something. Meal, and that means if it doesn't hold in oil, you got beans and oil going south. Big time. Meal, low and last, not doing any damage, but it does have the double top with the outside down day bearish engulfing ER sell signal on the high day and a minimum downside objective as a result of 325.50. It's just been going sideways here for 3 weeks, 2 or 3 weeks. A little unusual, but we'll see what happens next. South. Next, corn. Oh my God, it's doing the exact same thing, but with a little tiny twist. It's oversold for the last 2 days, and today's low of exact, well, there we go. Hang on, escape. And the exact low today, come on, doggone it. Fudge. I'm not it. I don't know why, but I'm not able to get the dumb price of the table to come up. I'll get you real close. 429 a quarter is actually a hair under the low, and I don't know why it's not coming up with that little table. So anyway, the low on this day, which was 425 and a quarter. Again, today's low is 420, 428, 429, something like that. 429. Very close to making a new low, not quite. A little lower than yesterday's low, and unfortunately low and last. If we were to make a high higher than yesterday's high, I'd have a bullish engulfing, and two of them, one on the low day, which is still the low day, February 26th. We got a buy signal on the low day of corn. But closing below that low, February 26th, could be very, very bearish. So I'm flipping my coin here from hoping and looking for bullish price action in grains to the exact opposite, or we're very, very close to turning back up, and I can't say we are until we are. Low and last, new lows, oversold condition, prime target for a bullish engulfing or a buy signal or a rally, which ain't happening yet, but they're super close. If you were an intermediate longer term trader or swing trader, you might be very tempted to put some buy stops not too far above this market right here, because if it had a double bottom formation on a broader scale from March to June, you're looking at the low coming up. I can't say that's going to happen, but this certainly presents a potential. What about cattle? At resistance, look, overbought last couple of days. I think it's about to roll back down again. What about hogs? The low day got broken yesterday, but we did have a great couple of days trade for hogs. These signals are not always the highest high or the lowest lows. Sometimes there's short-term trades as well, a day or two, swing trades, maybe even longer, a week or two. But as you have seen many, many times, these bullish or bearish ER sell signals or buy signals have been the high or low for months and months and months and months. October 13th, what was it? 2018, the October lows. I think it was 22. Our prime example for the stock market indexes. Huge long-term bottom. So far, so good. All right. So that's it for today. Thank you very much. Profitable trading to you.